Hi everyone, welcome back to my channel where I help founders of direct-to-consumer brands grow their companies through giving them tips on venture capital as well as content strategy. In today's video, I'm talking about how to raise VC funding or how to raise money from a venture capital fund. So if you're a founder who wants to understand what sort of options out there for raising venture capital, is venture capital fundraising right for your brand, what sort of documents you need to prepare and how to pick the right venture capital investor, then this video is for you and keep on watching. Let me begin this video with a quick side note that venture capital funding is not for everyone. There is a ton of brands out there who do not need to raise from VCs and who can sustainably grow themselves through bootstrapping their way all the way to success and do not need to raise external capital. And there is no really right or wrong answer on this. There is not really the right or wrong ways to grow your brand. It all really has to do with how much control of your company you want to retain, how quickly you want to grow, as well as your personal ambitions as a founder for your brand. And even though I come from the venture capital world and I am supposed to be on the side of the investors, I actually tell brands very often, do not raise capital unless you absolutely have to. And while it's good to always have an option to raise capital and keep those relationships warm, do not over dilute yourself or do not raise more than you need to. Now, with that out of the way, let me get into my 6 tips on how to raise VC funding, and keep on watching until the end because I gave a bonus tip that none of the founders do that I really think is going to help you raise VC funding. My tip number 1 on how to raise VC funding is to understand why you need to raise, how much you need to raise, and what is your use of funds. You as a founder and you as a brand need to have a very clear reason and a very clear explanation as to why you're seeking venture capital funding at this moment. And reasons like because I need it, or otherwise my brand's gonna have to go into bankruptcy, or we're not profitable yet, none of that is good enough because that shows desperation to the investors and it is a very big red flag. So instead, give a reason like I'm raising money for NPD, like new product development, or I'm looking to expand geographically, or I'm looking to accelerate my growth. I want to expand my team. I want to invest into original content or marketing or growth or whatever the reason might be, because that is gonna go down a lot easier with your potential investors. Now, within the same tip, you need to have an exact number of how much you're looking to raise. So when an investor schedules a first meeting with you, they're going to ask you how much are you looking to raise and how much of that you already have committed. And a very big red flag for a venture capital investor is when you give a range. So when you say, I'm looking to raise anywhere from $2 to $5 million. Now that signals to us that you do not know what is your exact use of funds. So you don't have a particular plan for the money that you're going to raise, or it signals that you are not confident as a founder that you will be able to hit your fundraising goal. So you really need to have the exact number of how much you're going to raise at the presentation level and at the first meeting, because that's definitely going to be asked. And staying within the same universe, you need to understand what is your use of funds. So you need to have either a pie chart or a list. The format of it doesn't actually matter, but you need to have at least a rough sort of allocation of how much of the money that you're raising you're going to spend on each particular goals that's going to get you closer to the first reason of why you are raising in the first place. Now, my second tip to raising VC funding is to have a target list of investors. And what I mean by this is understand the industry that the investors that you're approaching are investing in, understand the stage they're investing in, or geographical focus, so that when you approach an investor, your company is going to be relevant to them, as well as their expertise and connections are going to be relevant to you. So a way you can identify a target investor is by doing a little bit of research on their website and seeing who are their portfolio companies, and to see if your brand either can be in a synergy with the existing portfolio brands or they're similar brands to you. And if you see that the investor has contributed significantly to their growth, that signals to you as a brand that this investor might be a good target investor because they might help your brand grow in a similar way. Now, my tip number 3 on raising VC funding is having warm introductions. So the best way to get a warm introduction is to go to other founders out there who might have raised from venture capital funds in the past, because they will have connections to investors in the industry and they might give you recommendations as to who is the right person to talk to and give you a warm connection, a warm introduction to an associate or a managing partner of a fund, because through a warm introduction you have a much higher chance of having your deck be read and getting that first meeting. Another great way of getting a warm introduction is if you have any seed funding from angel investors or you're participating participated in accelerator programs or an incubator program, reach back out to those people and ask if they know any investors further downstream, because a lot of times venture capital funds will actually reach out to accelerators and incubators within the niche that we invest in so that they can refer us some of the very early stage companies that they think are great and that we might be interested in. So this is another very, very good way to get warm introductions. Now, my next tip is having your pitch deck ready. Now, this one deserves its own video, which I probably will make in the future, but let me give you a few of the pointers right now. First, let me talk about the file format in which you share your fundraising pitch deck. Now, I do not recommend that you share a Google Slides link because, to be frank, it looks a bit unprofessional. So I don't recommend doing that. And also do not send your fundraising pitch deck in a PowerPoint format, like a PPT or PPTX format, because that is nearly guaranteed that when the person opens the file and tries to print it, the alignment of different parts of your deck are not going to be the same. So it just creates more problems. So I don't recommend doing that. Instead, I recommend sending your fundraising pitch deck in a PDF format, because that is very easy to open, it's very easy to print, and you know for sure that your deck is going to be seen in exactly the same formatting as you have finished it. Another thing to talk about here is DocSend, and this is a bit of a tricky one because on one hand, from the investor perspective, it is very annoying to have to look at DocSend pitch decks because you do not have ability to save it, you don't have ability to print it. It's a bit of a pain, to be honest, to look at DocSend files. But on the other hand, as a founder, it's a great way to actually see who have seen your file and to get those backend analytics, which can be very, very useful for you. So this one is a bit on the fence and I can see the pros and cons for that. So just decide whichever one you want to do. I personally recommend going with a simple PDF file and then following up to your email. But if you really want to see those backend analytics, DocSend is also fine. And now a couple tips on what to actually include in your fundraising pitch deck. Number one tip is to have an executive summary slide in the very beginning of the deck. It could be second or third slide with the key information about your brand, like some of the KPIs, like how much revenue you've had, what's your customer retention rate, what's your CAC, customer acquisition cost, what's your LTV, lifetime value of a customer, some of the key information that you know your investor is going to ask from you. So just have it there, have it ready, easy to access and just easy to understand. So it's all in one format and it's easy to look at. Another tip is less is more. Don't overcrowd your pitch deck with too many words, too much information, because the amount of time that the analyst or whoever's going to be looking at your deck is very, very limited. So you want to make sure that it's not a very crowded page with many words. Make sure that your deck hooks the interest of the person who's reading it. So you look at it and you're like, oh wow, this looks actually like a very interesting business and looks like a very great investment opportunity. Let me now look more into it. And then you can include a lot more detailed information into the appendix, because if you hook someone's interest, then you know that they have committed their attention to learning more about your company, and then they definitely will go through the appendix and they will go and look at those files. But use the body of your fundraising pitch deck as a summary of your company and a very quick hook to the interest. Now, my next tip on raising VC funding is having a clean and organized data room. This also deserves its own video, but let me still give a couple of pointers on this one. So number one is make sure to include all of your recent financial statements, ideally not just for the last year, but maybe the last 3 years or so, and make sure that they are in Excel format so that whoever's the analyst who's going to be looking at that and doing early due diligence can actually access and see what formulas you used for whatever numbers are there. Also make sure that it's in English or whatever is the language of the country where you're approaching your investors in, because it is a bit of a time-consuming thing to go back and forth to ask the founders to actually translate the financial statement so that you as a potential investor can read it. Make sure it's all in Excel and it's in a language that your investor can understand. Then make sure to include a document with a cap table that outlines all of the existing shareholders, whether or not you have raised money in the past. Because if you have found multiple founders, if you've given some vested shares to your early employees, anything like that, your potential investor will want to see that just to understand how much shares are still on the table and who are all the shareholders involved. Include any press coverage if you are a beauty brand or fashion brand, or actually any sort of D2C brand. If you've gotten any notable press coverage, let's say from Vogue or Harper's Bazaar or anything like that, put that in. It's not gonna hurt. It's always great to see for whoever's gonna be stitching the internal pitch for your brand. It's always great to smack that on and say, oh, by the way, this brand I'm pitching has been featured in Vogue. So include those as well. And if you've made any claims on your original pitch deck saying that, oh, your socials are very strong, or you have a killer email list, or anything like that, just include files to support that, because highly likely you are going to be asked to show some sort of proof to the statements that you're making about your brand. So rather have it there without having your investor to ask, just have it there ready for them to look at. My next tip on raising VC funding is to be open and be cooperative. And this one sounds a bit like a no-brainer, but a lot of investors don't look at your company as purely potential investment on pure financial return. We actually look at brands as a relationship, and we're assessing you as a founder personally as much as we're assessing your company as an investment. Because when you're raising VC funding, you're entering a long-term relationship and a long-term commitment with each other for at least the life of the fund, which is 3, 5, sometimes 10 years. So you want to make sure that you actually like the person. And now to the bonus tip that I promised you in the very beginning of the video. So thank you for getting to this part of the video. Thank you for watching and thank you for your time. And let me give you that bonus tip that I don't see a lot of founders do, but I think has a tremendous impact on whether or not you're actually going to be successful at raising VC funding. And my bonus tip is invest in building your personal brand as a founder and get some press coverage for your brand before you start reaching out to investors. Because think about it, the first thing investors gonna do when they receive your pitch deck, when you hear about your brand, is they're gonna Google you. Is they're gonna see, well, what's out there about this brand? What are the reviews? Is there any information about the brand? So if you've gotten to this part of the video, congratulations, you have heard all of the tips that I have for you on how to raise VC funding. And I hope it was useful for you, and please subscribe because I post more videos and tips for founders of D2C brands on how to grow their brand through content, community, as well as a demystify venture capital. So please subscribe and I'll see you in the next video. Bye!